In the meantime, Kevin Green is here, and we got our PCE print that came in line when it comes to inflation. What are your thoughts here this morning, and what levels are you watching?
Yeah, Nicole, I mean, obviously we had the PCE numbers that came in line with the street's expectations. I think the only wild card that we saw was the trade balance data set that came out earlier this morning as well, but the market really doesn't kind of focus on that. That will have an impact on GDP estimates, and so I'm looking forward to the Atlanta Fed GDP Now forecast to see how much of a revision to the downside we might see because of that data set here. But when you're kind of looking at this price action, we had that 6,500 level yesterday. We are seeing a little bit of a pullback, at least for today, and what I'm kind of focusing on as far as the levels is the 6,500 level is going to be your first area of resistance. We're pretty much trading at around that level right now, about 12 points away from it. But if we're looking to the upside here, you're looking at 65.35. This was a key area for yesterday. This is going to be another key area here for today as well. And to the downside, 64.50 and then 64.20. We still have those downside levels, Nicole, just because there is positioning to the put side on the bearish side here in preparation for September. We know that that's a little bit more of a volatile month here. It doesn't mean that we have to go down, but usually we do see volatility actually creep up to the upside, maybe a little bit of liquidation and a rotation going into the latter half of this year. And the last thing kind of focusing on for next week and the trading action that we might have for today. Next week, we have a lot of economic data. We have the jobs report. We're kicking off the week on Tuesday with the ISM manufacturing data set, which is usually bearish. And we'll have the jobs report on Friday as well. So a lot kind of going on. We have month end that can always create a little bit of volatility, create a little bit of churn. And the fireworks probably will be in the small cap and mid cap companies at this point because of a rebalancing announcement that we're going to have for some of the smaller indexes that are out there.
All right. And look, you know, you have Yardeni out and saying that the Fed may be juicing stocks and stimulating an economy that doesn't necessarily need it, while many others are looking for rate cuts, and many of them. In the meantime, I see the 10-year bond yield at 4.23. Some of your thoughts there. What are you watching?
Yeah, you know, Ed Yardeni is absolutely right. We're at all-time highs. We have GDP growth right now that's averaging, if you look at Q1 and Q2, around 1.2 to say 1.5%. And you have a labor market that might be cracking under the hood, but we have to have that confirmed, and we'll have that confirmed on Friday. And so given the PCE number that came out today and cutting rates, you could say, yes, that actually does boost equity values. And I think that's another reason why we are seeing equities moving higher. The 10-year is going to be very interesting here. We're looking at the micro 10-year yield futures, and we're sitting at around 4.21%. The reason why this is kind of interesting, this is a key area of support. Nicole, we have not traded at this level for more than 2 trading sessions before the 10-year actually re-rates back to the upside. So let's keep our eye out on that. And if we are going to see a flush, it could be a pretty decent break where we go to 4% or even 3.9%. We've been kind of looking at this technical setup for a while now, and we're kind of getting fairly close to the apex. But the reaction at 4.2% I think will be key. And if we do see a retracement back to the upside, is that going to be a little bit of a headwind for equities? Just once again, got to be mindful of that given the economic data that we have on the calendar. But we are trading at some pretty key areas of support for the 10-year. Let's see if it's going to be able to push through and break through to the downside here, which once again may be conducive for equities given the right environment.
Okay. What about tech versus utilities, the ratio there, and why is it important?
Yep, so this is one of those risk on, risk off type of signals that we always keep our eye out on here. So we have the S&P 500 in blue on this 1-year daily chart, and then we have a ratio chart between the tech sector, the XLK, and the XLU. So as the orange line goes up, that means that the tech sector is outperforming the utility sector, which is usually risk on, and vice versa if that orange line is going down. What we actually saw over the last 2 weeks or so was utilities actually outperforming tech. We saw this whole broadening out of this rally, this rotation trade taking place, and we were actually making lower highs on this ratio. But over the last 2 days, we actually have broken that trend to the upside, which could give you a little bit more confidence, if you think this trend's going to continue, that the broader equity market could continue to reach new all-time highs here. I would say technically, if you're looking at the S&P 500, Nicole, the key area of resistance, just from a technical standpoint, a long-term standpoint, 6,660. So keep that one on your radar. There's a long-term trend line that every time that we hit it, and that's kind of that area, we do see a little bit of a pullback, a 5% to 7% drawdown here. So we have a little bit more room to the upside, even from a technical standpoint. And given these internals, this shows that we have risk on, at least for now.
And we just spoke to Jay Pulaski, who liked gold. He was talking about some of the mining type of stocks overall. I mean, you're looking at the gold chart too.
Yeah, Nicole, I think it was this time like 4 weeks ago, I was in Chicago, and we talked about the gold chart and how it was hitting an area of resistance for 5 times at that point. And that's really unusual, not only just for a commodity, but pretty much anything that you're really trading. So a key area of resistance, 34.50, we're hitting that level right now again. So this is going to be the 6th time in 4 months that we're actually hitting this resistance point. Technically, we're still making higher lows. We are kind of consolidating here. You would like to see a breakout. And if this is going to be a breakout, just given this technical structure, you would actually expect an aggressive move to the upside here for gold. On the other hand, if we actually break to the downside here, let's say we break around 3,300 or so, and we see some conviction when it comes to the volume, that's where you could see a massive reversal here. But this is actually a coiled spring that's ready to pop. Let's see if it's going to be able to actually have some follow through this time around. I don't think I've ever seen gold technically have a resistance point like this and hit this this many times in any type of consolidation over the last 10, 15, 20 years, Nicole.
All right. Kevin Green, great to see you. Thank you so much, breaking down all the key numbers and charts and things to watch. Appreciate it.